Using generative AI for day trading, a practical overview and considerations. While day trading is a very different domain than most standard use cases, there are ways to leverage generative AI to augment your day trading research and workflows. Below is a high-level overview of how you can potentially integrate generative AI into your trading process, along with cautions and best practices. 1. What generative AI can and cannot do for day trading. Pros of using generative AI. Data summarization and insights. LLMs can condense large volumes of text-based market data, such as news reports, social media trends, and analyst reports, into concise insights. Natural language processing (NLP) models can analyze sentiment from financial news, Twitter, Reddit, or other forums, helping you track market mood in real time. Strategy ideation. Generative models can suggest new trading strategies or variations of existing ones, assisting in brainstorming and algorithm design. Coding assistance. Tools like ChatGPT can generate boilerplate code, e.g., Python scripts or SQL queries, for data preprocessing, feature engineering, and backtesting. Cons and limitations. Not a crystal ball, generative AI is not inherently designed to forecast short-term price movements. It can analyze data, but is not guaranteed to produce consistently accurate buy-sell signals. Modeled hallucinations. LLMs sometimes produce text that sounds plausible but is factually incorrect or not logically consistent. Double-check any model-generated insights. Lack of domain specialization. Out-of-the-box models are not fine-tuned on financial data. Specialized training or domain adaptation is usually necessary to improve accuracy. Risk of over-reliance. Day trading involves dynamic market conditions where unexpected events, e.g., macroeconomic, geopolitical, can rapidly change outcomes. Relying solely on AI outputs without human judgment is risky. 2. Potential workflows integrating generative AI. A. Market research and sentiment analysis. News summaries. Use a large language model to summarize market-moving news from multiple sources. This can save time compared to reading full articles. Sentiment score extraction. Prompt an LLM to categorize tweets or headlines as bullish, bearish, or neutral. Aggregate these scores to gauge overall sentiment for certain stocks or markets. Theme or trend identification. Ask your AI model to highlight common themes across financial news or earnings transcripts, such as inflation pressure, supply chain issues, or AI adoption. Example prompt. Analyze the last 50 headlines about Company X. Identify which topics are most commonly mentioned and classify them as positive, negative, or neutral for short-term stock performance. B's data augmentation and feature engineering. Synthetic data generation. Generative models can produce synthetic data that might be used, with caution, for testing new ideas or stress testing strategies under various hypothetical market scenarios. Feature suggestions. Prompt the AI to suggest potential technical indicators or fundamental factors you might incorporate into your trading models, e.g., moving averages, volume trends, volatility metrics, social sentiment metrics. Example prompt. Suggest 5 innovative feature engineering techniques I can apply to 1-minute candlestick data for short-term price predictions. C. Strategy ideation and prototyping. Trading strategy brainstorm. Feed the AI general information about your style, e.g., momentum, breakout, mean reversion, and ask for strategy ideas or improvements. Code generation. LLMs can speed up your workflow by writing Python scripts for backtesting or creating automated trading algorithms in platforms like MetaTrader, MQL, or NinjaTrader, C# scripts. Example prompt. Propose a day trading strategy for a high-volatility tech stock, focusing on mean reversion. Provide pseudocode or a Python snippet for backtesting, including risk management rules. D. Real-time monitoring and alerts. Chatbots for market alerts. Some trading platforms integrate with AI-driven chatbots that can scan social media or news feeds and then send you alerts in natural language. Explainable signals. While most advanced AI signals are black box, you can prompt LLMs to provide a plain English explanation of the rationale behind certain alerts. E. Risk management and scenario analysis. What-if scenarios. Ask the model to outline potential market reactions under hypothetical events, e.g., sudden Fed announcements, Geopolitical events. Stop loss and position sizing suggestions. Generative AI can suggest guidelines for risk management, though you should always verify these with proven trading frameworks. 3. Building your own generative AI pipeline for day trading. Data collection. Gather historical price data, technical indicators, order book information, news headlines, and social media data. Data cleaning and pre-processing. Ensure data quality, remove duplicates, handle missing values. If you're planning to fine-tune a model, label data, e.g., bullish/bearish sentiments, breakout signals. Model selection. Pre-trained LLMs, e.g., ChatGPT, GPT-4, Llama variants, good for general NLP tasks, summarization, and quick coding. Custom time series models, possibly combined with generative approaches more specialized for price forecasting or anomaly detection. Fine-tuning or prompt engineering. Prompt engineering. Craft specific prompts to reduce hallucinations and guide the model to provide more accurate market insights. Fine-tuning. If you have labeled financial text datasets, you can fine-tune a model for sentiment analysis, entity recognition, or strategy recommendations specific to your needs. Backtesting and simulation. Offline testing. Evaluate your AI-driven signals using historical data. Track metrics like Sharpe ratio, drawdown, and win/loss ratios. Paper trading/demo accounts. Test in real time without risking capital. Validate that signals hold up in current market conditions. Deployment. Once you have sufficient confidence, integrate signals into your live trading platform with strict position sizing and stop-loss rules. 4. Important caveats and best practices. Beware of overfitting. Generative models might suggest trading strategies that look great on historical data, but do not generalize. Combine with traditional analysis. Use generative AI as a tool, not a replacement, for solid fundamental and technical analysis. Validate information. LLM outputs can be logically or factually incorrect, especially if the data is outdated or the prompt is ambiguous. Risk management first. Even if your strategy is AI-driven, do not neglect standard risk controls, diversification, stop losses, and strict position sizing. 5. Example end-to-end workflow. Morning routine. Your AI assistant summarizes overnight global market news in a daily briefing. It fetches tweets and Reddit posts about stocks on your watch list, assigning a sentiment score. Pre-market prep. The AI model identifies unusual volume in specific equities and suggests you look more closely at a few tickers with positive news or a spike in social media mentions. You review these suggestions and decide which stocks to monitor at the open. Intraday strategy support. You run a specialized AI prompt every hour, asking for a summary of any significant developments, e.g., Fed comments, earnings release, macro data. If an event significantly deviates from the model's expectations, the AI issues an alert to your trading dashboard.